realize that over the last year and a half, 2 years, the reserves that we've been building up have gotten so substantially large that, yes, if we do begin to slow down production, we'll still have those reserves that we've been building for the last 1.5 to 2 years to draw upon.
Attention hard asset investors. If you want to maximize your gold and silver holdings, consider owning businesses that own a massive amount of the metal, who will benefit the most as the world witnesses the mother of all gold rallies. With nearly 10 million ounces of gold resources through acquisition, this 50-cent stock has received a $2.65 price target from Cantor Fitzgerald. Learn more at crushthestreet.com/goldstock.
Hello, everyone, and welcome into crushthestreet.com. We got a new guest today. He's a commodities broker, and he's a third-generation grains trader. He's with IFG Futures Group, and this man is in the heart of the financial markets, and I'm looking forward to the insight that he's going to bring us regarding the current economy and just the different commodities. So, Tom Fritz of IFG Futures Group, thanks for joining me.
Oh, thank you for having me.
So as a new guest, Tom, and a commodities broker, I want to get your thoughts on the economy and then move down a list of some sectors and get your assessment regarding these areas within the economy.
Sure.
So could you give us your thoughts on the current economy, where we're at here in 2016, with the stock market, the unemployment? I mean, what is your current assessment for the way you go into your trades here regarding the economy?
Okay, in regards to the economy, I'll preface one thing. The U.S. economy, I don't think it's quite as strong as some would like us to believe. The Federal Reserve puts a lot of importance on unemployment. You have to realize we have the smallest workforce dating back to the early 70s. So really, all they're doing is looking at the workforce, how many people are working, and they're saying, oh, look at this wonderful unemployment we have. Well, with that said, you also have the smallest workforce. So, I'm thinking, the U.S. economy is okay, but is it really as strong as some would like to believe? No, I don't believe that for a minute. But when trying to compare the U.S. economy to other global economies, we're not as bad as other global economies. And I think that leads into the strength of the U.S. dollar. So many other global economies have been impacted by, slow trade growth, low oil prices. Well, in this country, low oil prices, sure, it's impacted the shale fractures, but one thing that's changed is the U.S. is now able to export oil. So in that regard, I think, that does bolster our economy a little bit versus other global economies. So going forward, I know this is on everyone's mind. Back in December, the Fed talked about, okay, we're going to raise interest rates. I could see interest rates being bumped up a little bit in short-term rate vehicles. Long-term rates, not a chance. I don't see how that could ever be justified. People talk about inflation being a driving force to raising interest rates. Look around. Where do you see inflation?
Right.
If anything, we have deflation. You look at food prices. Food prices are coming down. Not only is the U.S. flush with food, the world is flush with food. Right. The number one international food grain is wheat. World wheat stocks have never been higher. So, with all that being said, okay, we can open up the door for slightly higher interest rates. I think, from an economic standpoint, it does act as a bit of a stimulant. But to see what the Fed alluded to in December, saying we're going to have 4 different instances this year, I doubt that highly.
Well, what does it say about the Fed's action to attempt to raise interest rates, and interest rates falling in the face of their Fed funds rate hike. What does it say about the current economy?
I think, once again, it just says our economy's not as strong as they would like to make us think.
So, Tom, in 2016, what are your thoughts on gold? You know, I mean, again, this is the first time we're talking, and I'd like to get your thoughts, with what's going on around the macro economy, what the Fed is doing, all the money printing, the fear that is out there. What are your thoughts regarding precious metals, specifically gold, here in 2016?
Gold was my number one trade of the year. In the circles that I run, a lot of my friends, they're not really in tune to what commodities are all about, and so they all ask me every year, what's your favorite trade of the year? Well, this year, my favorite trade of the year is to be long gold. Why gold? I think gold is your best hedge against uncertainty. And I think if you look around, we have a fair amount of uncertainty out there. So, so far, I'm looking okay in that regard. I think, my opinion, gold will give you the best rate of return for 2016.
Tom, how concerned are you about the markets? You talked about uncertainty. We've seen a great deal of volatility with the stock markets, especially in January. And, it's still, people are very hesitant when it comes to overall U.S. markets and global markets for that matter. How concerned are you about the general stock markets in terms of being long?
In that regard, I'm not that all concerned. What I've seen through all my years, and there've been a lot of them, the U.S. equity markets are no longer an investment vehicle. They've become a trading vehicle. And with the advent of, black box trading, electronic trading, I think we have more and more people, trading short term rather than, what used to be the investment market. So, you've got people moving in and out constantly, reacting to every little headline that comes along. So, but overall, given interest rates being as low as they are, where are you going to put your money? So I think in that regards, the U.S. equity markets, they're still okay. It's just be ready for some really sky-high volatility, because your day-to-day trading, or I should say your day-to-day movement, has been taken over by short-term traders, not long-term investors.
Tom, you alluded to it earlier in our discussion, but let's talk about oil going forward here in 2016. Did you expect oil to come down to the $30 level in 2015, 2016? And what are your thoughts going forward for the rest of the year?
I never made a price projection to the downside, but I knew, just because I'm not a crude oil trader, I don't focus it on that much. I watch it out of the corner of my eye. But when you had U.S. production increasing almost at a dramatic rate due to the shale operations, you have your biggest OPEC producers, in this case Saudi Arabia, saying, hey, we're not going to lose market share, so we're not going to cut back on production. We need to gain market share. It was very reminiscent. Being a child of the 60s, I remember in the small town that I grew up in, there was 3 gas stations all clustered at one corner, and they all had gas wars. And what gas wars mean are lower prices. Everybody's vying for that market share. And I think that's what happened here. We not only had an increase in supply, but everybody vying for market share. When people are vying for market share, that usually means, more times than not, lower prices. Because what's going to get you a better share of the market? You're offering the lowest price.
Well, won't low prices ultimately crush production, and then, eventually, even in a weakened global economy, the low enough price will cause the supply to come off the market, and then ultimately give us higher prices?
Oh, I think the ultimately that will happen, but you have to realize that over the last year and a half, 2 years, the reserves that we've been building up have gotten so substantially large that, yes, if we do begin to slow down production, we'll still have those reserves that we've been building for the last 1.5 to 2 years to draw upon. So I do think the ultimate will be higher prices, but I don't think it'll happen as fast as some would like to have it happen.
So in your experience with markets, could you see oil going back into the $20 range and even below $20, not as a price projection, but just would it surprise you if we saw that?
Yes, it would. Yes, it would. I think one of the functions of low prices is to stimulate demand, and I think we're achieving that slowly but surely in the energy markets. I'm a big fan of watching spreads in the energy sector, and spreads have stabilized. They're no longer going south, meaning we're not putting additional carry into the price structure. And to me, that's the first step you have to see towards stabilizing the downtrend.
Tom, talk to us about grains. This is not something that we do a lot of discussions about here at crushthestreak.com, so I'm interested in learning more about it. What is your prognosis on grains, and how do people profit if they want to have some exposure in this sector that you are very, very familiar with?
There's many different ways to participate. You have your futures market, you have your options on futures, that type of deal. But I think one item in particular that has really hurt the grain market's exposure to the media is grain markets have been in a downtrend since mid-2012. And, unfortunately, your investment public, they don't want to deal with bear markets. They want to play bull markets.
Well, it's essentially followed the overall commodity sector, and is that
it has.
Is that typical?
I think it's a very big part of the overall commodity sector. You have to realize, it's food.
So why does it follow the commodity sector so closely when it is something that is essential for life on this planet?
Because everybody uses it. I think that's it in a nutshell. Not everybody uses gold. Not everybody uses crude oil, but everybody eats food. And what's happened is the world has gotten into a situation of overproduction. We had sky high prices back in initially 2008, market sold off, but then back in 2012, we had some prices that we had virtually never seen before. So all these countries started growing more and more food. And, as global economies start to slow down, we are overproducing. To me, it comes down to real simple supply versus demand. The demand leveled off, but supply continued to increase.
So what does the future for the supply of food look like around the world? I mean, does the human population have a pretty good handle on being able to supply food for the however many billions of people, 7 billion people that exist here on Earth? And what's the macro trend that is profitable that exists in grains?
Well, you have to realize grain production is reliant on the whims of Mother Nature. And for the last 3 years, the majority of the world has enjoyed really good growing conditions. So with that said, and you look at the biggest user, which is China. They have the greatest population. They've been stockpiling grain for the last 3 years. So it's to the point where, everybody's elevators, silos, storage locations are bulging. So what will have to happen to turn that around? It's going to be up to Mother Nature. Now, it's been my experience being a grain trader for as many years as I've had, and I tell people I started paying attention in the mid-'70s. It's unusual to see good growing seasons last more than 3 years. Not to say it can't happen. Anything can happen when it comes to weather. But I think a lot of people will agree that in the last couple of years, weather patterns have been nothing short of erratic. And so using that going forward, I think the potential is there for higher food prices, higher grain prices in this regard. Are we just going to, go to the moon? No. Because like in the energy sector, if we do have a poor growing season this coming year, we've got reserves to fall back on. But if we have 2 poor growing seasons in a row, then things will get a little tenuous.
Yeah, well, what does the reserves look like in terms of their ability to last? And again, this is my ignorance to this specific commodity. I mean, oil, it can sit there. Gold can sit there. How long is grain good for?
Well, if it's handled properly, which in this country it is indeed handled properly. We have the finest technology for preserving our stocks. It can last a lot longer than you think. But usually 3 years is the norm. I'll tout you a situation in China. They're sitting on 3-year-old corn, and it has gone out of condition. Why has it gone out of condition? Because of their technology for preserving their stocks. They're just not there. Mm-hmm. But usually you figure, you can keep grain in relatively good condition for 3 years.
Wow. Yeah, I guess I'm just used to my bananas going bad after 3 days. That's why 3 years does sound like a pretty long time. So, okay, so where does the majority of production of grains come from globally?
Your principal, growing countries are, number one, the United States. Number 2, Europe. Number 3, the former Soviet Union. Then you have India and China. Well, I tend to take China off the chart because China grows for its own people. They don't export.
Okay. That's really interesting. Do they import much grain? Or
no, they're the largest food importers in the world.
And that makes sense because of their population.
Oh, and ever since, and once again, this is my opinion, ever since Tiananmen Square, now I don't know if you're old enough to remember that, that was the last time they had a people rebellion that showed, any major consequence, and they quickly squashed it. And what they did to make sure that it would never happen again, they started importing food like there was no tomorrow.
Wow.
When you have a socialistic economy, in this case a communist economy, you have to keep your people happy. Mm-hmm. And how do you keep your people happy? You keep them fed.
Right. Yeah, that's a basic need that I think needs to be met. So, Tom, I really do appreciate you coming on and sharing your knowledge and insight with us here at crushthestreet.com. Are there any last words of information that you were hoping to share with us before we said goodbye? And, of course, please feel free to share information regarding IFG Futures with our audience.
Well, IFG Futures, we're a retail brokerage firm. We have a number of different brokers in our office that do specialize in different markets. So, if you're listening, public, has a market they'd like to explore, where they see some potential there, give us a call, because we've got somebody that can, give you some really good, intelligent feedback in that regard to that particular market you're looking for.
Awesome. That's Tom Fritz, everyone, with IFG Futures. Tom, thank you so much for coming on the show with me today and having this conversation. I really do appreciate it.
No, it's been my pleasure. Thank you.